Okay, we now know we have an imbalanced bank, that a quick fix isn't going to do the trick, and that we're not missing any information. It's now time to start rolling up our sleeves and getting into the bank rec. The first cab off the rank is to check the deposit side of the bank statements and the accounting entries only. And the reason for this is twofold. Firstly, bank statements inevitably have far more information on the payment side than on the deposit side. In other words, businesses as a rule pay out far more amounts of money in smaller packets than they deposit into their accounts. Generally because the deposits are put through once a day, but payments can sometimes happen 3 or 4 a day, different checks, electronic funds transfers, etc. The second reason is that the deposits represent one side of the statement. If you get the deposits right, you know the error in a bank statement can only be in one direction. And I'll give you an example of what I'm getting at. Our bank statements. We know we have an imbalance of $3,608.94. Now, the size of that error may or may not be an issue. We're taking it, of course, as being a significant issue. But if that error was small, let's say our bank was only out by $36.94, the temptation might be to say, well, that's not a problem, it's only small. But be warned, the principle is very simple. Let's say this withdrawal of $1,200 was $10,000 higher. In other words, it was in the accounts at $11,200. That's a substantial error. On the other hand, this amount here was out in the opposite direction by an equally large amount. Not necessarily the same, but by a large amount. The result is that your imbalance in the bank still looks small, yet your error is potentially very large. If that withdrawal was a private withdrawal and this deposit was income, then you're going to effectively have a very large overstatement of income because you assume that the bank rec didn't matter because it was small. Now this is easy to fix when you reconcile deposits, because once you reconcile deposits, you know if the imbalance is only $36.94, it has to be on the withdrawal side. That means the expense amount, or whatever it is you're out by, has to be small. And at that point, now I'm an accountant and a stickler for detail, but at that point you might decide it's not worth your while pursuing it. But to do that without reconciling deposits first is not wise, and the good news is reconciling deposits is generally very easy. Alright, we're now going to reconcile the deposits. The first thing you've got to do basically is get a report of the deposits that relate to the period of the bank that you are trying to reconcile. In our case, that's from the 1st of July 2011 to the 30th of September 2011. Now, all programs are different, but generally speaking, all accountancy packages will let you select an account and then get information about the transactions in that account over the period that you're doing. In the case of MyOb, this is how you do it, 1 July to 30 September. And here are our reports. Now this gives us all the transactions for the period we're interested in. And what we're interested in, of course, is the money going into the bank because we're doing deposits. Now that totals, as you can see, $67,025.45. That is the amount that we're interested in. That is what we're going to reconcile. Because according to us, that should be in our deposits in our bank statement. Now, to do that, we need to note what that number is, so write that down. The next thing you need to do is then have a look at the bank reconciliation again, because the bank reconciliation will tell you where you have outstanding deposits. Because remember, when you look at the bank statements, the outstanding deposits are not going to show up because they never came through. So let's just revisit our reconciliation and see where our outstanding deposits are. And in this case, we have outstanding deposits of $6,190. Now that money has been deposited in our accounts but hasn't gone through the bank statements. So basically what you need to do is just analyse that information. We know the deposits per the accounts are $67,025.45. That's straight off our accounting information. We then need to subtract the outstanding deposits, which total 6190, because remember, they never went through to the bank. Then you must remember to add the outstanding deposits from the previous period, which we didn't put in the accounting file, but which did come through the bank. In our case, this was zero because our bank the transactions basically started on the 1st of July. According to that then, we now have net deposits of $60,835.45. You then go and get your bank statement information and have a look at what the total deposits are per the bank statement. And the total, and these are easy to add up because you can often just get the statements and they're there right at the end of the year, or you add up the end of the month, so you only have to add them up 12 times. But in our case, it's $64,525.45. So you put that in, and we have a difference of 3690. Now that's a nice round amount, but it's not particularly great news because it's not zero. If it had been zero, we would have known that our problem is on the debit side, on the expense side. Now we need to deal with the fact that we have an imbalance in the deposit side. Because our imbalance in total is $3,608.94, we know that the error that exists on the expense side is actually very small. Because if the imbalance is 3608.94, and we've already found that the deposit contains an error of 3690, we actually only have an $81.06 error on the expense side. Now, for some of you, as mentioned earlier, that may be enough to stop the processing, but we do have to find the 3690. And the next chapter, we will look at doing that, which effectively is just a click-off process.